In my value portfolio, Intel is currently the largest position by dollar amount, and that position is up 44.5% year to date in 2023. However, this wasn't always the case. It didn't always look like this was going to happen. In fact, in February, it hit some of its lowest lows in a very long time. In fact, I think, yeah, it hit its 52-week lows in February, below $25 a share. It's now at $38.67 a share at the time of this recording. If you look at the news in January and February, all you see is negative headlines about Intel. Intel stock tumbles after brutal results. Intel profit to slump. Dismal forecast ahead. Can Intel recover in 2023? No. Be prepared for a longer wait. Now, in terms of the bottom line, that's actually true. 2023 is going to be, overall on the year, a pretty bad year for the bottom line for Intel. But as far as the stock price goes, that didn't prove to be true. Intel. The dividend cut does not change the stock trajectory. Read why Intel stock still looks destined for the teens. That's right. This article is contending that Intel was destined to fall below $20 a share. Now, personally, I think that kind of aged like milk. Now, if you look at today's headlines, longest winning streak in nearly 3 years, outpaces gains, what you should know, Made in America wave, they ride it to a big gain, buy, according to Barron's 4 hours ago, buy, it's well positioned for AI. Oh lordy. So, of course, once it's recently performed well, gotta buy it because it's well positioned for AI. AI, the newest buzzword. I couldn't satirize this any better if I tried, so I'm not even going to try. But basically, the headlines here, they really look at the recent performance and they look for any way they can to rationalize it. They'll think about the most recent quarter, the current one, and maybe the next one. That's about it. But if you ask them to think about, oh, what's the situation going to be like in 2, 3, 4 years? And how about 10 years? It doesn't seem like the headlines really take that into consideration. For the most part. I mean, there are exceptions. If you look through enough of them, there are people who said, well, hey, it's hurting right now, but it may still be good for the long run, etc. But, man, the vast majority of them just chase what the stock is doing basically within the last couple quarters. And that's about it. They don't really give you a whole lot of insight into the long term, nor do they seem to really care about that. People have a really hard time, I think, parsing longer term thinking, which makes them poor investors. Like, people tend to sell at the bottom. In fact, most people I've known who got out of Intel in the last year got out when it was still somewhere in the 20s. The exact wrong time to get out, because why? The perception was all negative. Now, I don't say that the perception was negative for nothing, okay? But I got into Intel at first. My first foray into Intel was early 2022. Now, it was already pretty well announced that they had a specific long-term plan to reignite a certain amount of growth in the business and meet certain objectives to achieve this kind of master plan that they have. They're building a lot of new facilities, and they're doing a lot of R&D, and they've got a pretty aggressive timetable, but it's a multi-year timetable to achieve a lot of different results. Now, a lot of the spending that they did really ramped up in 2022, while at the same time, PC sales, which are a big part of their chip business, plummeted because they were coming off of a really big increase in sales from 2020. You know, the COVID bump in chip and PC sales. That, of course, had a really disproportionate effect on the bottom line. EPS absolutely got crushed. 2023 looks to be even worse in terms of the bottom line. But it seems that over the next couple of years, 2024, 2025, you're going to see a return to better EPS where they can kind of rebuild from there. And I think 2025 is maybe 2026, somewhere in there is where you'll start to see maybe some of this spending wind down a bit. And I think that's what analysts are taking into account on these EPS estimates. And some of the fruit, some of the objectives, the seeds they planted, start to bear some fruit for investors on the bottom line. And frankly, when I try to figure out a fair value for Intel today, and granted, like, I already feel pretty good about my position. Like, I don't think I need to necessarily add more, but it wouldn't necessarily be unreasonable. If I think about the 2025 analyst projection, which is a pretty meager 246 for bottom line, take into account their solid balance sheet, apply a really hefty 15% discount rate, considering that this is something that's going to take multiple years to play out potentially. There's some uncertainty. It may not go as well as expected, but give them credit that the EPS would grow at a pretty good clip from there if they do achieve a good amount of what they set out to achieve. I think that's very plausible, and it probably, honestly, if they really knock it out of the park, it would be a lot higher than this in terms of EPS growth. Like 9% from a 246 dollar per share earnings is not much for Intel. They've had between $4 and $5 EPS many years previously, so this is not really that big of a number compared to how much things are expected to grow in the chip industry overall. The new fabs that they're building, and some of the speculation on the AI applications of some of their products. So if any of that really plays out, I would expect them to, at a certain point, achieve even higher heights than what they had achieved in, say, 2018, 2019, which were pretty good years for Intel, financially speaking. So really, I think growing at 9% a year from 246 is actually on the conservative side, I think. I could be wrong there, but hey, this is all an opinion. Everyone's got one. So if you put that in, it comes out with a fair value to pay today of somewhere in the low to mid 40s, which, current price $38. I think it's still justifiable today. If you're really convinced that Intel is going to execute on what they're working on, I'd say today's stock price is probably pretty reasonable if you're relatively convinced of that. In fact, if you want to see, if assuming that my assumptions for 2025 and beyond came true, and you just applied the standard 10% discount rate, the actual fair value in 2025 would be in the mid to upper 50s for Intel. So, and that's 32% higher than today's. It's a margin of safety of 32.44% compared to today's price. So, honestly, that's a lot of potential upside there. I apply the higher discount rate simply because we're using 2025's number, and so that we're waiting 2 additional years to see if they even hit this number. It's uncertain if they'll do so, and we have to account something for both the uncertainty and the time value potential opportunity cost of tying up the capital today in hopes that the 2025 projections come out. So that's where I'm at with Intel. I'm still happy with my position. Glad I held. Glad I didn't panic sell when I was eating deep red on it. And I continue to look forward to seeing what they come out with going forward. That's where I'm at right now. By the way, make sure you like the video. Subscribe if you're not subscribed already. Hop on the Discord, link in the description. Join M1 through my referral link. Deposit some money, $5,000. You'll get 100. I'll get 100. That's a sweet, sweet C note for not a whole lot of work. Take it easy, everyone. Peace.